You've probably seen the RSI indicator on a chart, right? And chances are you've been told it's all about spotting overbought or oversold conditions. But what if that common advice is the very thing holding you back? What if the real power of this tool is hiding in plain sight? Well, today we're going to uncover it.
So here's the game plan. First, we're going to completely shatter the biggest myth about the RSI. Then, I'm going to show you how to draw one simple line on it that changes, well, everything. From there, we'll build out two core strategies, learn why confirmation is the secret of the pros, and wrap it up with a master stroke for timing your trades almost perfectly. By the end of this, you'll have a completely new trading toolkit. All right, let's just get right to it. That standard overbought/oversold strategy, it's not just incomplete, it can be downright misleading. And look, this isn't just my opinion. The data shows there's a far more powerful way to read what the market is really telling us, and it all starts with challenging the default settings. So we have to ask the question, is that default 14-period RSI that literally every trading platform gives you, is it actually a flaw? Could it be filtering out the very signals you need to see the most? And here is the evidence. A quantitative study on Bitcoin tested a bunch of different settings, and the results, they were pretty staggering. The standard 14-period RSI, it scored a 1 on importance. You know, decent. But look what happens when you switch to a 30-period RSI. The importance score jumps to over 4. That's not just a small improvement, that is a complete game changer. By simply looking at a slightly longer time frame, you filter out so much market noise and get drastically cleaner signals. Okay, so we know a 30-period RSI gives us a cleaner signal, but how do we actually use it? Well, this is the core technique. We're going to draw trend lines directly on the RSI itself. This lets us peek behind the curtain and see the effort behind a price move, not just the move itself. Think of it like this. When you're watching a great athlete, you don't just see if they win or lose. You see how they're running. Are they getting tired? Are they slowing down? Or are they finding a second wind? That simple trends line on the RSI tells us the exact same story about the market's momentum, and it often tells us before the price chart gives anything away. Now, you can't just draw these lines anywhere. There are 3 simple rules. 1, you only connect the significant peaks or troughs, the important turning points. 2, a line needs at least 2 touches, but 3 makes it rock solid. And 3, this is the most important rule of all. If you have to squint or strain to see it, it's not really there. The best signals literally jump right off the screen at you. Okay, so with this one technique, we can unlock 2 incredibly powerful strategies. The first one helps you spot when a trend is about to die out, and the second one tells you the perfect time to jump on a trend that's just getting started again. So on the left, we have breakouts. Imagine a downtrend. You connect the RSI's peaks with the trend line. When the RSI finally breaks above that line, that's your early warning that the old downward trend is running out of gas. Then on the right, we have rebounds. This is for an uptrend. You connect the RSI's lows. When the RSI dips down, touches that line, and then bounces off of it, that's your cue that the train is leaving the station again. But, and this is so crucial, an RSI trend line break is an alarm bell. I'm going to say it again, it's an alarm bell. It is not a green light. It's a huge warning that the market landscape is shifting, but it is not your signal to just jump in blindly. And that brings us to the professional mindset. See, a signal is just a hypothesis, an idea. To turn that idea into a high-probability trade, you absolutely must get confirmation. This is what separates guessing from having a real strategy. So what exactly is confirmation? It's really just finding a second piece of evidence to back up your first signal. And when it comes to confirming a shift in market momentum, there is one tool that acts as the ultimate truth detector, and that's trading volume. So why does volume matter so much? Because it measures the conviction, the raw power behind a price move. An RSI trendline break that happens on high, increasing volume, that tells you the move has fuel in the tank. But a break that happens on low, pathetic-looking volume, that is a major red flag. It means the move has no real support and is very likely to fail. All right, are you ready for the masterstroke? We're about to take one of the most famous RSI signals, the divergence, and we're going to fix its single biggest flaw. It's absolutely terrible timing. Here's the problem every single trader faces with divergences. They are fantastic at warning you that a trend is losing steam and a reversal might be coming, but they are absolutely terrible for telling you when. A divergence can flash on your screen for weeks, sometimes even months, before anything actually happens. It's frustrating. So, here is the elegant 3-step solution. First, you spot the divergence. Let's say the price makes a new high, but the RSI makes a lower high. That's your alert.
Step 2, you zoom in and draw a small trend line connecting the recent lows of the RSI. And then step 3, you wait. You do nothing. You only act when the RSI breaks that mini trend line. That break is the final confirmation that momentum has officially shifted, turning a vague warning into a crystal clear entry signal.
So, let's bring it all home. We started with a simple myth, and we've ended with a complete system for reading market momentum. Let's pack all of this into your new trading toolkit. Here it is, your new RSI toolkit. First, test out a 30-period RSI for way cleaner signals. Second, use RSI trend lines as a leading indicator for momentum. Third, use breakouts to spot potential reversals and rebounds to join continuations. Fourth, always, and I mean always, seek confirmation, especially with volume. And fifth, the master stroke, time your divergence trades perfectly with a mini RSI trendline break. In the end, it really all comes down to this. Learning this framework isn't just about adding a few more lines to your chart. It means you're learning to read the real story the market is telling, a story of strength, of weakness, of effort, and of exhaustion. And anyone who can read that story has an edge that goes far beyond any single indicator.